Kranthi Bathini of Wealth Mill Securities. Kranthi, first of all, thank you for agreeing to do this interview at the very last minute. Always appreciate your taking out time and joining in. But let's
Thank you,
start
Nancy.
with,
Always my pleasure.
sure. Let's start with the biggest news that came in yesterday. There's been like some thaw in India-China relationship, rare earth issue being resolved, and both the nations also agreeing to start direct flights, etc. Now, we did see a good rally in the entire auto and auto ancillary space, which was already buzzing on the back of the GST rate rationalization. Now, the rare earth curbs, being lifted. That was, of course, one of the talking points between India and China. How much of a boost do you think that would prove to be for the EV makers? So, should one prefer EV makers or ICE vehicles? How would you look at the entire auto space in the wake of all the tailwinds that are coming in?
First thing, Nandita, we need to consider two things for especially what are the benefits auto sector is going to derive with respect to the bilateral ties that has been building up between India and China. First of all, we have a notion in our minds always China, we treat them as the nearest competitor to us. Of course, in many of the sectors, they tend to come as a competitors to us. And when we think about them as one of the complementaries and substitutes for us, there can be a lot of benefits because of China in the past 15, 20 years. They have done enormous progress in terms of the as a global manufacturing hub where India has missed. But of course, we are quite strong in services. Now coming to the developing bilateral ties between the bonding between India and China, it offers one thing is the comfort in the borders and coming to the trade ties are concerned, trade bondings are concerned as one of the key concern for every one of the automakers across the US, Europe, and Asia. The rare earth minerals are concerned. So now, with the strong bonding that has been taking place at this point of time, that will ease the supply chains and Indian OEMs can have much edge when compared to European or any other supply chains and OEMs are concerned. That will definitely benefits Indian OEMs in the medium to long term. And also the GST, when we buy auto OEM in India, one of the key beneficiaries are every sector, every government, number of taxes starting from outright GST and one of the highest weightage on auto is OEM is concerned, any car is concerned, highest 40 to 45% goes uh, towards the taxes. So any ease of GST can be a big booster. That's why we can see some kind of a strong bounce back coming to auto sector is concerned. And the second part of
Hmm.
your question, whether you choose ICE or EV is concerned, of course, the global mood is concerned. There seems to be going with respect to the policy of global environment is concerned. Slightly, we can see some kind of a consolidation in terms of the EV space. Of course, there is a long way to go, but in the medium to short term, we can see some kind of a sense of consolidation in the global EV space is concerned. While coming to India, still the EV space demands for the infrastructure one hand, the other hand is the policy subsidies that has been weighing on the EV space is concerned. By and large, there is an ample scope for EV in India. The numbers are still at a minuscule. The infrastructure spends has to be increased over a period of time. The concern is if you have to go for a long drive, where can I search for the charging? These are the charging infrastructure. These are the things
Hmm.
that has been weighing on the infrastructure, but we are in a better way. As still the EV space is at a budding space, there is a ample opportunity in the EV space and allied accessories companies are concerned in EV.
Sure, of course, the EV penetration, of course, that remains an overhang. Of course, charging infrastructure, etc., need to be spruced up. But let's talk about one pocket that's expected to see a big boost because of the GST rate rationalization. That's the entire consumer durable space, particularly the AC makers. Till now, AC makers have suffered, right? If you look at the earnings as well, and that was largely because of lower room AC sales, lower demand for that in the wake of early onset of monsoon. Now, of course, this GST,
Angel One app is built for trade.
even PG Electro Plus for that matter.
One is the white good makers and also the back end compressor makers are concerned, like
Hmm.
the PG Electro and names like Amber and all. Uh,
Hmm.
in the medium to short term, what we are seeing is some kind of overhang because of the climatal issues. Indians have a typical tendency when there is a heat only, they try to think about the buying a AC. The extra sales are concerned. That's where the overhang on these companies on a medium to short term. But in the long-term prospects are concerned, it's not a business to just gaze for a quarter to quarter or a year to year. The long-term prospects are concerned. The disposable incomes are going up in India. So earlier we used to have a single AC for home. Now it has been roaming, entered the kitchens also. So due to the increase of the global warmings and temperatures, so there is a long headroom, Nandita. There might be some kind of a short-term bumps, blips would be there in terms of the sales numbers are concerned. But for a long-term investor, if the investors have a 3 to 5 years horizon, any correction in the stocks, definitely it gives a good entry level for the investors because of these short-term overhangs. GST can be an extra bonus for these companies.
Hmm. Okay, that's the view. Thanks for putting that into perspective, Kranthi. But one other pocket, since we're talking about the GST rate rationalization, another pocket that's in focus is insurance. There are chances of insurance falling. I beg your pardon, GST rate falling to 5% or nil. At the onset, it looked like a booster, but insurance companies are of the view that since 5% or nil GST would not give them access to input tax credit, that would be an overhang in terms of cost. So in that light, insurance companies are expected to approach the finance ministry and urge the ministry to not tinker with rates. That's source based. But how do you see this whole dynamic play out for insurance as a whole?
As you rightly mentioned, the initially the market pursued just like it's going to be a positive, but as the input credit overhang, that is one of the key for the any of the companies getting the input credit also one of the essential. Uh, so that can be we need to wait and watch how the GST Council and the Finance Ministry going to take up this issue. But most and probably the insurance products are by and large the protection plans, okay, and we tend to see some kind of under penetration, but the urban and metro sales for these insurance companies as the saving products or protection products are concerned, we are in a consolidation phase. The penetration has been one of the highest in the recent past, but given the kind of the young population we have, around 43 crores of the population is aged between less than 40. So that's where the key opportunity for these companies. One thing is what we are witnessing is the digitalization of savings and also the protection that gives extra edge on these companies. So for a longer term perspective, even though the medium to short term, some kind of a consolidation, what we witnessed in the recent past with respect to the insurance stocks are concerned, insurance as a sector is concerned, and there is also the sectors is emerging into one is the health and protection and saving. So there is a complete division in the insurance sector. So the individual sectors will thrive. The health protection, which is also the general insurance, also is there in the space, and also the savings. So savings might be what we are witnessing is there was a ulip flavor saving through insurance, that has been slightly subsidizing. That savings has been moving towards mutual funds and direct equity in the recent past, what we witnessed
Hmm.
post-COVID. But health and protection going to thrive in the coming years. So there is a greater opportunities on a longer term perspective. The medium to short term, these kind of overhangs would be there. We need to wait and watch how the GST Council going to take up this issue going forward.
Okay, yes, we'll have to see. And we have the all-important group of ministers meeting on this rate rationalization tomorrow. So that's one crucial cue to watch out for. And of course, we'll also be watching out for the timing of the rate rejig, right? Because this is typically the time when people go out and purchase, do their purchases for the festive season. If it doesn't really come by on time, perhaps the festive buying would be delayed. What's your thought on that? If at all it comes by Diwali right at that time, do you think much of those purchases will be delayed?
Yeah, some kind of Indians are cost conscious by and large, and these are not the essential goods. So, can people can wait for some more time to get the price reductions? And Nandita, and in autos, there is a dichotomy what we are observing. One is the entry level segment. You will get a lot of discounts, okay, and the automakers are ready to deliver within few hours. But the high end is concerned. Okay, there is a waiting period of 5 6 months, 7 8 months. So these are the divergences are coming. But the as it is pronounced by the Prime Minister, the GST Council can be on their toes to announce as early as
Hmm.
possible. That's where we can see the early reaction in the market with respect to OEMs and all the GST related stocks are concerned.
Hmm. All right. Okay, that was about the whole, GST rate rationalization and the themes that would get impacted. But one of the big talking points today is the entire online gaming industry, right? Of course, the government is likely to introduce the prohibition of online game and online money gaming service. Parliament is likely to, introduce that bill today. Of course, that would be a big setback for the gaming industry. Also some impact on Nazara Tech could be felt. Just want to put things into perspective. The online gaming industry has paid somewhere around 22,000 crore rupees in taxes. So that's been a good source of revenues as well for the government in FY25. That's the figure, and 5,000 to 18,000 crore rupees of GST was paid in the last fiscal, and 3,000 to 4,000 crore worth of TDS was also paid in FY25. Not sure how much of exposure some of these names like Nazara have to real money gaming, but your thoughts, because there's a whole 40% GST on online gaming as well. So how do you look at this industry, and what would your call be on stocks like Nazara in that sense?
Nandita, first and foremost is look at the astronomical numbers, the tax collections and GSTs and all. That shows the appetite of Indians towards this online gaming and the focus and how people are looking. Of course, there are some controversies and in this entire space. So government want to rationalize and restrict and regulate this the entire space. As and when there are regulators coming to the picture, when there is a framework that do comes, okay, the organized players tend to get benefited over a period of time. We need to see the final draft of the bill at this point of time to look into that, and some kind of a controversies around this online gaming and all, and people have been there were a lot of controversies around this thing. That is the reason government want to completely revamp and regulate the entire space. By and large, whenever the regulator comes into the picture, when there are draft guidelines, the organized players who are with the spirit they are doing, they are going to get benefited. We need to wait and watch how this entire space, due to this bill, it's going to come up at this point of time. But
Sure.
it shows one thing is how much the opportunity that is there for equities, if this kind of money can be coming to best part of investing, that also can boost the equity volumes in the coming years. That's what the digitalization is taking place at this point of time in India. The digital revolution we can completely witness in this online gaming.
Hmm. Point taken, Kranthi. Running out of time, but I want to get in one or last couple of questions with you. We had a query on our feed, largely on the IT space. So, Mahendra Sarkar, I don't know if he wanted a technical view or a fundamental view, but let's get him a fundamental view on this. He has exposure to names like Infosys and TCS, and he wants to know whether he should exit and book losses, or is there any turnaround expected? My question to you is how should one be placed in the IT stocks? Should one be more tilted towards BPO, or should one be more tilted towards ER&D, where earnings I think were a little better than the rest of the pack? And how should one really look at the AI theme, especially when one is an Indian investor?
Nandita, one thing is at this point of time, the IT space in a consolidation phase. And given the kind of the previous 20, 25 years, how the Indian IT companies, the bellwether company could able to sustain. We have witnessed the TMT bubble in the back in 2000, technology, media, and telecom. We witnessed the great financial crisis, GFC in 2008, and we witnessed the COVID, the extraordinary events in the past 2 decades. But these bellwether companies could able to sustain these kind of moves. Now they are facing a different storm. The US protectionism and the tariffs are concerned, that has been creating some kind of overhang on the IT companies. The narrative has been quickly changing. Just 3, 4 months back, we are talking about the US exceptionalism and the US growth path. Now we are talking about one hand overhang on the US economy. That's what creating overhang on the Indian IT companies, which are
Traders never ever use stop loss.
for a longer term investors, definitely these companies are quite strong in their domains. These are the short term headwinds, and Indian IT companies, they miss it somewhere, innovating them as a technology companies rather than the portrayed as a service companies. That was one of the overhang on Indian IT companies. But still, there is a greater demand for the service industry to come and emerge. They have been shaping up in terms of the AI, and different parts of the AI is concerned. So if I have a time horizon of 3 to 5 years, definitely I can start chipping into IT companies. This is a completely contrarian view to the street
Hmm.
view, not in a single go. Most probably in a staggered manner, every dip, the strong companies I can accumulate for a longer term. This is a complete contrarian view. Only one
Hmm.
thing is you should not look at quarter to quarter or a 1 year perspective. It is by and large investors in TCS or
Hmm.
Infosys or any bellwether IT companies, they comes up with a long-term horizon. That was the trend. If
Hmm.
the similar trend, one can buy at dips.
Sure. Taking your point, contrarian view. Yesterday, I had Firoz Aziz also on the show, and he also was taking a contrarian bet on IT. So yes, that's the call. Accumulate in a staggered manner, and that too for the long term. Don't look at it from a quarter to quarter, on a quarter-on-quarter basis. But with that, Kranti, would like to thank you for taking out time and joining in. Always a pleasure. Look forward to our next
Thank
one
you,
as well,
Anita.
and if have a good week ahead.
Thank you, Nandita. Thank you.